Can you believe that we are nearing the end of the summer? Where has this year gone? With the end of the summer, for most of you, that means high cash balances, whether it be the completion of your busiest season of the year or additional funding that you received this year, in particular from the PPP or EIDL funds. Regardless of the makeup, you probably have a higher than usual cash balance. One of the most common questions I get this year is, how do I plan my cash flow until next season? Other questions that I get is, how much can I afford to invest in new year equipment improvements, such as like outpost renovations or whatever else, from now until next season? And then even, how much do I need to save for next year or income taxes that are going to be due in April? That's what I want to go through with you today. So let's go ahead, go through the process. I'm going to give you the information that you need to be able to take your cash today, look into the future, and answer these questions on what you can afford to invest in the future, how much you need to be able to put in reserves for next season, and so much more. So are you ready? Go ahead, go grab a notepad or open up Excel and do this along with me, okay? I want you to take the starting cash. So your starting cash is going to be, what is it that you have in your cash balance of today? Go ahead and write it out. So take that beginning cash balance and add in additional cash that you anticipate to collect from your customers. This is going to be any additional money coming in from now until the end of this season. Then I want you to subtract out any anticipated payments that you're going to make for your cost of sales or your operating expenses. Okay, this will include basically expenses to continue running for the rest of this year. Okay, also you can take a look at your balance sheet and go to your current liabilities section, and in there are going to be some liabilities that are cash payments that are need to be due, or that are due and need to go to your vendors. Okay, so this is going to be your outstanding vendor bills. This is going to be any credit card balances that you have due, any payments to affiliates or industry partners, to local agencies for land use fees, local taxes, and so on. All right, I also want you to think about setting up an operating reserve. What does your operating reserve entail? Well, your operating reserve is going to be the amount of money that you anticipate to spend in preparation and getting ready for next year. Okay, or for your next season, for the most part, whether that be the fall, the next winter, the next spring, or the next summer for some of you like river outfitters who just run in the summertime. Okay, with that reserve, I want you to think about the first month or two of operating expenses that is going to need to be used as a buffer in case if another situation happens that would delay your season. So oftentimes that's going to be some governmental impacts, or there might be some weather, drought kind of issues that would delay the season or impact it. Heaven forbid we have another pandemic, right? I don't think that's on any of our radar, but again, it's good to have that cash in preparation of it. Having that additional operating reserve helps buy you time in making your decisions and be able to adjust accordingly. Okay. When it comes to these startup costs and thinking about what you're going to need for next year, this does not include your big purchases for next season. Okay, we're going to talk about that, but we're not looking at like those future investments such as gear or vehicle purchase or anything like that. Okay, we're going to discuss that a little bit later on. So at this point, we've looked at where your current cash balance is and effectively satisfied all of your operating requirements from now until next season. Okay. The next step I want to look at is to set aside money and look at your own personal financial needs. Take your needed monthly salary, owner pay, whatever you want to call it, and multiply that times the number of months between now and your next season. Okay? That's going to be the amount of money that you need to pay yourself during the shoulder season. Okay? We also want to calculate an anticipated income tax obligation. So there's accountants specifically that do this kind of stuff, but for the purposes of what you need, let's simplify it a little bit. So you're going to take your business's net profit, or what you anticipate the net profit to be at the end of the season, and multiply it times either a range between 15 and 30%. You can get a little bit more of an accurate number based on this calculation has been in years past, and to come up with that, look at what last year's tax obligation was, divide it by last year's net income, and you have a good range. You can do that for multiple years just to get a little bit more comfort with it, or you can just straight up use 15% to have a smaller reserve, or to be really conservative and use 30%. Okay. If it is on the upper end, when you do that actual calculation, and an amount that's like anywhere from about 20 to 30% range, there's probably some saving opportunities, and I really encourage you to speak with a financial planner or like a tax accountant to get that nailed down and to find out where those opportunities and those savings can really be. You'd be amazed at how much money that entails for some proper planning efforts. Okay, so we also want to look at where your own personal's financial additional needs are. And this is going to be your HSA contributions. It's going to be your retirements, such as your IRAs, your 401ks. It's going to be 529s for your children's education savings, potentially savings for a home purchase. Okay, make sure you include that kind of stuff, and that you're making sure that you're retaining that. It's really important. Okay, then I want you to accumulate all of these personal financial needs and take it out. Get it out of the business, okay? Take it out of that operating checking account. You don't want to see it anymore. Do not give yourself the opportunity to spend it, okay? Get it out of the business, all right? After looking at your own personal financial needs, let's take a look at where your business's debt requirements are. So we're going to set aside your debt payment needs for what your cash obligations are going to be from today until that next season. So this is going to be your long-term debt payments, and it's also going to be like your short-term, maybe line of credit kind of deal. Okay, it's a good idea to have for those debt payments an additional month until that season, just to give yourself some of that additional flex in case it's a short season. Okay, when it comes to the line of credit, I want you to, we're going to look at that and evaluate it a little bit differently. So at this point, what I want you to do is all of those individual items we spoke about, between your operations, additional operating needs, your personal financial needs, as well as your long-term debt commitments, tally up all of those cash requirements, okay? Sum it all, subtract it from your current cash balance, and this is the amount of money that's left over, okay? We can do one of two things with that line of credit. Ideally, if your cash balance, again, it should still be plenty high enough, go ahead and pay off that line of credit, okay? You don't want to be sitting on it. If your cash needs are short, or if it's in the negative at this point, we need to convert that line of credit into a long-term debt function, okay? If it's negative, then there needs to be some alternative financing to be able to pursue, but we're going to assume that's positive for right now, okay? So after you've paid off that line of credit, again, what's left over? So the remaining amount of cash that's left over at this point is what you have to be able to invest in the future. It's the amount of money that you can afford to spend on new gear purchases, vehicles, improvements on your outfit post, whatever it may be, okay? So itemize all that out, all right? Are you still sitting on plenty of cash, or at this point are you shy on cash? Okay, if you have plenty of cash, great, you can afford all of it. If you don't, either cut back items or look at particular items and see which ones you can delay. Okay, the other thing you can do is seek financing for the bigger items. So the bigger items are going to be your vehicles, your land improvements, and so forth. Okay, I do not encourage oftentimes financing smaller item purchases, such as like your gear, but if you absolutely have to buy new gear and there are no funds available within the business, get thrifty with it. Buy used gear or generate cash elsewhere. Oftentimes this is going to be you making your own personal contributions into the business, okay? So that's it. You've just tallied up everything that you need to do to be able to project cash balances from today until the beginning of this next season. If you're having a hard time thinking of these items or anything else beyond what I just mentioned, look at your cash needs during the shoulder season from years past, okay? That'll oftentimes spark some memories and remind you on what's out there that you may not be thinking of right now. Also, feel free to reach out to me. I do this with a lot of other outfitters and adventure guys, so I really know the right questions to get you thinking about the things and remembering items that you would have probably spaced out on otherwise, okay? I even have plenty of tools to help accumulate everything, play scenario planning, play out some different scenarios with these, and even project cash balances by month or even weekly with some incredible accuracy. So I'm Zeb Smith. Wherever you're watching this, leave in the comments box below if you find this useful, what you enjoy about it, and let me know how it's helped you with project your cash balances. Have fun out there, stay safe, enjoy the final months of summer, and yeah, keep on keeping on.